Welcome to another Ariaswave YouTube live stream update. So we have a lot to talk about today. It seems that the markets are doing exactly what I thought they would, starting to roll over. So I thought this would be a good opportunity to talk about where it's going to go. So that will be cool. As soon as we get a few more people in there. Yeah, so welcome some people in the room there. Say hello, state your name and your intentions. So the latest from the Fed definitely talks about how what I've been saying for so long is that they're going to keep raising rates. This is no surprise. And I've been saying this for a long time, even before, like last year, the beginning of last year, right? It was just a matter of time before the bond yields bottomed. And that means that we are going to see rates to the moon. No surprise. Literally, we're just in the beginning of that. So that's another part of my analysis. If you haven't seen my latest market update, it basically outlines all of those key points. You know, I didn't include crypto in that just so I could focus in a 20-minute video, which is long enough. You know, so you could see that interest rates are going to go higher. and I posted that before Jackson Hole, before Powell came out and said what he said. So is it a coincidence that I've been saying this? I mean, this hasn't happened in what, 40 years, right? And here I am, some dude on the internet predicting this type of stuff. I mean, this is not just something that, you know, you can just pull out of a hat. You know, you've got to have some pretty solid background analysis to, you know, to sort of say that type of thing, you know, and actually, you know, try to have some credibility in the whole thing. So, you know, that's to me, that's a sign. So yeah, welcome Joshua, one of my awesome members. Been helping me out lately with the getting back to my roots and making, you know, analysis fun again, which is what it should be. So it's no coincidence at all that they're basically going to crash the market, right? If you haven't seen that interview with Anthony Pompliano released like a day ago, he says it quite clearly. They're going to crash the market. They're going to torpedo this thing, he says. And that's open. That's out in the air now. There's no, it's not a conspiracy theory, or it's not any kind of, you know, wishful thinking, or it's just, you can't fight the Fed, right? You cannot fight the Fed, and there's no way it's going to happen. It's going to be an asset deflation, right? Asset price deflation period, the end, right? It's going to be a depression style reset, right? Now, I'm not talking about the World Economic Forum type reset. I'm talking about just a simple, straightforward, we need to curb inflation. So the key is to skyrocket interest rates up into a point where it's, you know, bringing inflation down. Now, you got to think about this, right? You've got the United States of America, who basically leads the world economically, right? they're not going to exactly put themselves in a position to have a Venezuela-style hyperinflation environment, are they? I mean, it just doesn't make any sense why they would do that. So it makes sense. It's not going to be pretty for people, but it's something that needs to happen, and they're in the process of doing it. So there's no problem there. It's just, you know, it's just another cycle, really. But, you know, that's going to have some pretty big implications for cryptos. Absolutely. Right. The point at which cryptos actually came into the scene was I mean, it's perfect timing up until the point where Bitcoin hit 60,000, perfect timing. But then you've got this situation we have now where, you know, rates are going to go through the roof. And, you know, if you mined Bitcoin and you made thousands of them back when it started, and then you sold it at 60 grand, beautiful. Just wait your ass off, enjoy your life, do whatever it is you need to do. But, you know, a lot of people are starting to notice now that, you know, a couple of years ago, you got into cryptos, you know, and you didn't sell it, you're almost break even right now. So it's a matter of just knowing when to get in and out of the market. Right? Just being a hodler is not really going to get you anywhere in this world, especially during these times. Being a hodler will definitely help you in the future, but at the moment, it's not gonna be good. So yeah, so regardless of how many people entering this stream right now, doesn't bother me. It's the replay later which gets the most views historically, so to me, not a problem. I will continue to talk about a few things before I move to the charts. So, all right, you know, let's have a look at the charts straight up. Let me get the chart that I want to talk about here first. So me and Joshua did a bit of analysis last weekend, and we talked about the exact thing that is going on right now. We pulled apart XLM like no one has ever done. So this is what I'm gonna bring this up now. Right. So in my previous XLM update, I did say specifically that we need to hit a target of 0.09, right? And a lot of people would have thought, nah, that's, you know, I've had some comments. I've definitely had some comments from some people and messages and stuff saying, look, the rising wedge, it's not going to break down this and that. And, you know, this is a bottom and all sorts of stuff. I'm like, yeah, fair enough, whatever, but you don't know the waves. Where are you pulling this out of a hat? Like, where is your analysis coming from? Like, seriously, like, if you're using Elliott wave, forget about it. You're already lost. You're going to lose until you realize that it's not working. It's just proven. It's a proven fact. I've proved it myself. That's why I made Ariaswave. I literally built it from the ground up. And Joshua knows about it. I've shown him some things that I don't really show people, and that's when I first started to try to figure out the waves. It was a pretty difficult process, but definitely got there in the end. In terms of the actual pattern. So the actual pattern, although it seems complex, it's more complex on a chart than it is when you learn it. you know, if you join my program, my premium subscription, you will definitely actually learn the actual pattern and the variances of the wave components. And they are very specifically in order, sequential, right? Elliott wave is not sequential. It is by no means sequential at all. Elliott wave is nothing but some dude from the early 19th century, 20th century, right? Using some printed charts to try to figure out a pattern. And literally he was on his deathbed almost, right? He was incapacitated somewhat, and there was no computers around. So no technology like we have today, yet apparently people still rely on that old antique method. It really just surprises me how people just continue to use this. And like people like Harry Dent, they are wrong until they're right. You know, and you can be wrong. Like they say, the broken clock is right twice a day, right? Well, you know, especially when you're talking long term, you don't even care about the short term. That's pretty difficult, and it's even affected Elliott wave themselves, right? They've had some pretty messed up predictions over the years, right? I've still got one of their original seminars, which I managed to save like years ago, and I'll never delete them. I'm going to keep them forever, because it really just shows the essence of Elliott wave, and it has really no like proof. There's no proof that it works. There is none. Even their own analysis is flawed. Elliott wave is nothing but a rediscovered money-making tool for the person who rediscovered it, basically, right? They have a good program where they reinvest into the business, and then Elliott Wave International can make money off the brand name. It's just a brand name, right? Which is why I called my service Ariaswave, because it's like, okay, well, let's put some real analysis out there and see how it pans out over the long run compared to some of the predictions they've made over the years since way back. It's just never worked out. So my analysis is flexible in that I know when I'm wrong, and that's why I get my members to help me out from time to time to get me back into that mind frame where I'm actually doing some good analysis. So looking at this XLM chart right here, the first and most obvious thing to me, right? So we have a wave one. Okay, the wave one is correct, right? And I don't doubt that for 1 second that that's wave one from the highs, right? In the case of XLM, I'll show you the full count, right? From the highs, this is a type 1 weak 5-wave move. So that means, like in Elliott wave terms, it's a leading diagonal, right? So the leading diagonal typically will have this type of characteristic behind it, right? So it'll have this sort of wedge type pattern, which is just the beginning of a larger move down, right? But the thing with this pattern is that the corrective process is starting at the low end. So there is a couple of things that can happen here which will definitely cause confusion. And I've thought about this a lot, and I can already see what's going to happen here. Similar to what happened in the Dow Jones or the S&P 500, all that sort of thing, where you had this move down since the end of last year, and then you've had a bounce, a bear market rally, right? Now this is going to produce I believe it's going to produce either a similar outcome or it's going to be just so weak that it can't even produce that kind of pump, right? And it would be of no surprise, but there is something interesting that historically I've learned that can happen when this type of pattern occurs, right? And that is, right, you get this movement down, and then right at a specific time when there's potentially like a news event, like I don't know if it's going to be like the midterms. It could be, right? But I don't really like to, you know, talk about news events when it comes to predictive analysis in trying to predict how a correction will unfold, because I know that a correction has certain parts. It has an A, B, C, D, E, right? And we're seeing an A, and a B has to go down to, in my opinion, at least 0.09, right, where the green line is. So at the very least, we're going to see a B. Now, I'll go back down to the small degree, and I'll just talk about this B wave for a second, right? I just want to outline a couple of things here, right? So you look at a B wave, right? And it's obviously like, how can I say it? Okay, so look at it from an Elliottian's perspective, right? You get a move down, and then you get a 3-wave move, right? So Elliottians believe that a correction consists of an ABC pattern, right? So just knowing Elliott wave in itself, there's a lot of people looking at that, right? So therefore, it'd almost seem like, okay, so that's the ABC. So that's the wave 2, right? Which is not, hasn't happened yet, but let's just assume I'm an Elliottian, right? I'm going to go, that's a number 2 right there. Okay, ABC, and then this is a 1, and then we've got a 2, and then we're going to start to get a 3 down, right? Some kind of Elliott thinking there, right? Except for starters, that bounce was absolutely ridiculous. It was tiny. That's not even trying to put a fib on it. It's stupid, right? It's ridiculous. And then you got a 5-wave move, a correction, all right? And then you think, oh, Elliottian would be like, yes, this is going to keep going down, unless you've got some other thing going on in your mind, like this is a leading pattern right here. This part here is a leading pattern. Okay, that doesn't look right, but anyway. So, okay, so this is one thing I want you to just pay attention to for a second, right? Have a look at, let's just get rid of this wave here. Have a look at the first move down in A wave, right? Just look how sharp and long that wave was, right? Now, let me just line this up properly here so we get a good reading, right? Now, take that same wave from the end of the correction, right? Oh, what's that? This move down is already taking longer than the initial wave. Well, if you thought it was a wave 1, it's already taking longer. That means that it's wrong. All right. Wave 3 is not weaker than a wave 1. So it can't be a wave 1 and a 2 and a 3. All right. So this bear market, it's not going to go down in a straight line, and there's no reason to think that it possibly could. Right. So here, yes, I'm expecting this, and it has to, this move actually has to, according to my rules, which have never been proven wrong, the lowest point here is right there. Right? You at least have to go down and touch that line, right? You have to make a new low, right, for that wave to even be considered complete. It is not complete. That's why if you look at my latest XLM update, I said we need to go down to the dotted green line. Okay. So have we hit that yet? No, we haven't. What does that tell you? It means that, you know, there's still some more movement down to go. Right. So immediately right there, you can see that what kind of move would you call that? You know, drop it in the comments. What move is this? What kind of move is this? Right here. Right. The move down since the B wave E. So far, what can you see there? Tell me in your opinion what you can see. Because it's an interesting pattern, right? It's already produced what appears to be like a 5-wave move, right? Right here, this thing, right? We had that move down recently. Is that complete? Okay, the problem is that it can't be complete because it hasn't made a new low. So if you don't understand that, for starters, then you absolutely have no idea what you're looking at. Because there are certain rules in wave components that can't be broken. Okay? Can't be broken at all. Not allowed to. Never been broken. Right? The only way it's broken is if your analysis is wrong. And that's the kind of thing that I teach. That's the kind of thing that I preach. That's the kind of thing that when I have a training session with my member, he will say to me, no, that doesn't look like a zigzag. That doesn't look like a 5-wave move. Right? You've got to think about this stuff. If you want to learn the waves, you actually need to know what the hell you're looking at on a chart. Right? And I'm going to say this until I turn blue one day. I'll be like a Smurf, right? Let me put it to you this way, right? Let me just break it down for you. This move here happened, right? What move is that? Remember, there can only be 2 patterns in a market, 5-wave move and a zigzag, right? So what happened afterward, you know, like seriously, what is that? And this is exactly the same conversation that me and Joshua had the other day in that breakdown that we had, right? If you cannot answer that simple question, it's a simple question, then you have no idea what you're looking at on the chart. And I literally just told you, there's 2 patterns that occur in a market. It's a 5-wave move and a zigzag. We had one 5-wave move up for A. Where's the B? Right? Critical, absolutely critical. So moving on from that. Okay, go back to the 4-hour. Just bring it down a bit here. So, okay, so once we get a B wave complete, right, down to the green line, take the profits, right, because it's shorted from the highs of the red line here, like 12 cents, right? When do you when do you take profit? Like, what is the point where you decide to take the profit? You need to know this. If you don't know it, you're in a trade that you have absolutely no idea where you're going to get out. Rule again, I'm going to say it. Jack Schwager, Market Wizards, right? If you haven't read that book, I suggest you read the hell out of it because it teaches you a lot. But Jack, actually, I got to send you that, Joshua. I forgot to. I'll make a note of that. right? If you don't know where you're going to get out of a market trade, don't get in. What the hell is the point of getting into a trade if you don't know when you're going to get out? Right? Answer that simple question, right? Because if it's just luck and it's like a gambling, you're getting like a bit of a dopamine hit in your brain because you're just excited because this thing's doing something that you finally, thought was going to work in your favor, and then suddenly it goes in the opposite direction. Well, this will happen even if you follow my steps. Even if you do actually take profit at 0.09, what next? Right? Obviously, C wave has to happen, but how big will C wave be? Will C wave be a big pump back to the previous fourth wave? Hey, that's an Elliottian thing. You want to use Elliott rules? Then actually understand what the hell what you're doing. So there is a number of ways that this market could pull back to the previous fourth wave, which, by the way, it's a minimum. It's at a minimum going to pull back up to the previous fourth wave. Okay. I just don't see it any other way. But the thing is, it could happen in the midterm elections, right? So whether or not we, like depending on what this pattern is, and I'm going to get into that in a sec, right? Because XLM right now, this pattern here is a little bit sus. I'll give you that much. It is sus. And I think I know why. But I'm not going to touch on that yet. I'll get to that in a minute. Let's just say, for example's sakes, right, that this move down to where it's going, right, it happens to be around the midterm elections. So you're probably thinking, well, how can that be? That the midterms elections like over a month away, or like over 2 months away. Cool. Then use it to your advantage. How? So the first thing I would suggest is that potentially the C wave might creep up, not as high as this, right? The C wave might creep up a little, might get a D wave down. Now, by then, we might be potentially around, the midterms, November, I believe it is. And then you might get what appears to be a bottom, and then you'll get your E wave up. Boom. Hey, it might even go higher. That E wave might even spike up to the previous fourth wave. Who knows? Could be a big move right there, right? But then what happens is it reverses completely down, right? That's how markets trick the shit out of you. And if you're an Elliottian, you got no chance. You got no chance of even trying to predict that kind of price action, right? It's not going to happen. I can guarantee it. But if you use something different like Ariaswave, then that can give you it can give you a perspective of how it could turn, like what waves to expect. But in terms of how big and large those wave components can be, well, if there's a news event like the midterms that occurs, you probably are going to get something that pumps and then dumps, right? What do they always say? Sell the news, right? You should always sell the news. I don't disagree with that. I think it's a good idea. Sell the news. You get a pump, sell it. Right. And if you want an example of this at the small degree, just go to the 15-minute chart, zoom right in, right? What happened right before this move down? We had a little pump and a complete dump. I actually shorted at this high because it was such an obvious thing to do. A trade within a trade. But it was just so obvious that this was going to dump after that pump. I mean, this is not the start of a bull market, right? We're in a bear market in general, but in this wave, it's a mini bear market. So why would that suddenly start pumping up? I mean, look at this low. This low is not the type of low that you would go long on. It's just not. So, you know, that said, fair enough. So anyhow, you want to look at the Dow Jones. All right, let's just go to the DJI. No problem there. My last update, market update, I did say we're going to get ready for a move lower, right? It's starting to move lower. Look at that. All right, US 30. This is the chart I used. I said when it was around here, I said you can short this now or you could wait for a pullback. Right? And what happened? Wow, free money. Free money on that analysis there. You know, take it or leave it. It's up to you. Just leave it on the table. It's all good. Nobody cares. So yeah, I probably got some low views on the live stream simply because the quality of the video before I upload it is a bit not good. I need to upgrade my internet here for some reason for live streams. So yeah, so I'm tooting my horn here, tooting it really good from the highs. Fib retracement 0.618, perfect, exactly what I said. All right, we're waiting for a move lower. It's going to happen. All right, so seeing as though we don't have many people in the house due to probably bad quality on the live stream, so I've tested this before, I'm going to leave it there until I sort out my bandwidth issues and make my live streams a bit clearer. Then this will be it for now. So hopefully you found this one interesting and informative. I do indeed thank you for watching.